Gold just hit $4,100, first time ever. This is the fastest gold has moved in decades. When gold moves this fast, it usually means one thing: something serious is happening behind the scenes. Trump slapped 100% tariffs on China. Crypto markets saw the largest liquidation event in their history. Central banks are buying gold like there's no tomorrow. And institutions are pouring money into Bitcoin ETFs at a pace nobody expected. The question isn't why is gold flying? The question is what this means for Bitcoin and whether this whole story is just the beginning of something much bigger. Let's unpack it. This is not a financial advice, always do your own research. Gold doesn't jump to $4,100 just because people suddenly decide it's pretty. It jumps because trust in the system is cracking. This isn't new. We've seen it in ancient Rome, in Spain, in Weimar, Germany, at the end of the Bretton Woods system. The pattern is always the same. When government money starts losing value, people run to hard assets, to things that cannot be printed on demand. The difference this time? It's happening globally, all at once. Gold's momentum indicator just hit its highest level in 50 years. 95% of central banks say they will increase their gold reserves over the next 12 months. 43% are already doing it. 73% plan to cut their dollar exposure. Visual Capitalist here reports something really interesting. Gold now makes up 24% of central bank reserves, highest since the 90s. And for the first time in 30 years, gold reserves have now overtaken US Treasuries. So we're not talking about an inflation hedge position. We are talking about protection from a fundamental problem in how the monetary system works. And here's where it gets really interesting. Many people say Bitcoin is the digital gold, but data shows something different. While gold was climbing, Bitcoin went through hell. October 10th, Trump announces 100% tariffs on Chinese goods. Within hours, total collapse in crypto markets. Total market cap dropped from $4 trillion to $3.24 trillion, $19 billion in liquidated leveraged positions, the largest liquidation in crypto history. 1.6 million traders were wiped out overnight. Bitcoin fell from $126,000 to $101,000 before stabilizing back up once the tariff fears eased. Lucas Keely, CEO of Future Digital Capital Management, called the liquidation event a wake-up call for traders that high leverage is a very dangerous game in a market this illiquid and this close to a cycle top. But wait, last node data shows something important. Funding rates collapsed to 2022 levels. Complete leverage reset, guys. All speculative positions cleared out. Is it painful? Yes, but maybe that's exactly what the market needed to build a solid foundation for the next leg up. Because if you want a sustainable bull run, you need to shake out the weak hands first. While retail traders were panicking, institutions were doing the exact opposite. Matt Hoogan, CIO at Bitwise, says something really interesting. Wall Street has a new obsession. They are calling it the debasement trade. What does that mean? You buy assets that cannot be printed. That simple. And everyone, JP Morgan, Morgan Stanley, BlackRock, wants exposure to gold, to Bitcoin, to anything that central banks cannot multiply. Just in the first week of October, Bitcoin ETFs pulled in $3 billion. $3 billion. One of the largest 5-day inflows in history. Bitwise reports that institutions have bought around 944,000 Bitcoins this year. That's 7 times more than what miners produced in the same time period. That is why Bitcoin on exchanges is shrinking. Even though the price has been sitting between 110 and 125k for weeks, supply is falling and demand is rising. It's classic. The price hasn't moved much, but that's almost the point. Institutions are stacking Bitcoin at these levels while supply dries up. Hoogan says if ETF inflows continue at this pace, $200,000 by year end is quite realistic. And the logic is simple. The more Wall Street treats Bitcoin like digital gold, the more it behaves like gold. Here's what everyone got wrong about Bitcoin and gold though. For years, people assumed Bitcoin would move with gold as they declared it digital gold. That they're both hard assets protecting against inflation. Natural partners, you may say. But a recent analysis from investing.com confirms what on-chain data has been showing. Bitcoin and gold have diverged significantly. Bitcoin follows tech sentiment and liquidity cycles. Gold, on the other hand, follows geopolitical fear and currency debasement. They are not the same trade at all, guys. But here's where it gets interesting. There's a pattern emerging that most people miss. Look at the historical relationship. Gold makes a new all-time high. That's good. Then, as gold starts dropping, Bitcoin launches into a parabolic run. This isn't a coincidence. It happened before 2017, it happened before 2021, and the data suggests it's happening again, right this moment. So, when Bitcoin crashed while gold soared in October, that wasn't the story ending. It was possibly the story setting up. So what does this pattern tell us about what's coming? Analysts are forecasting Bitcoin between $150,000 and $200,000 in the coming months. And historically, every major gold rally over the past 15 years has been followed by a strong Bitcoin surge. And here's another interesting chart showing that Bitcoin moves with gold in correlation, but with a 60-day lag, and the projected price of Bitcoin is $156,000. What's the key takeaway? Every time gold hits a new record, it's not just a number on a chart. It's a signal that the monetary system is under huge stress. And historically, that stress eventually flows into Bitcoin. Not immediately, yes, but predictably, with a lag. Trump's tariffs, geopolitical fragmentation, currency debasement. These are all drivers of the gold rally. And once the initial shock wears off, the institutions will realize that gold alone isn't the answer. Gold breaking $4,100 isn't the finale. It's the signal. The world's losing faith in fiat, and gold is the first to react, indeed. But Bitcoin, it's the follow-through. Gold warns, Bitcoin responds. Gold hits new highs, and within weeks, Bitcoin explodes. So ignore the noise, the liquidations, the fear, the headlines. The real story is that trust is shifting off paper money and onto assets that cannot be printed. Gold's breakout doesn't tell you to buy gold. It tells you to get ready for Bitcoin's turn. Now, if this helped you see the bigger picture, hit the like button, guys, subscribe to the channel, and stay tuned, because the next 60 days could rewrite the entire script for crypto. The financial system is not dying at all. It's simply evolving. The only question is, will you evolve with it or be left holding the old world's money?